Do I need an LLC for a side business? Well, this is attorney Bob Diamond. In this video, I'm going to answer that question and give you a lot more that people do not tell you about, that ChatGPT is not going to tell you about, the insider secrets from an attorney that doesn't even cost you a penny. So let's stay tuned while I show you how to protect yourself, how to save money, and how to move forward with great confidence, and even how you could set aside hundreds of thousands of dollars and save money on your taxes through the magic of an LLC. So do you need an LLC for a side business? And I can tell you as an attorney, yes, is the quick answer. Because we live in a society where people sue, they litigate. And just the cost of defending yourself can bankrupt you. And if you have an LLC, you can probably avoid even most of the costs of defending yourself if you need to. So it can be absolutely your golden shield of protection against what may be an unfair attack on you, or it may be a fair attack just from a mistake that you made. And, attorneys are very creative about finding ways to blame other people for the problems that their clients had. And sometimes it's unfair, sometimes it's not right, but you need to protect yourself. So the answer in short is yes, you absolutely need an LLC for a side business. An LLC does not need to be expensive for someone who's a solopreneur, meaning if it's just you. And why is that? Because a lot of the complications in LLC come from having partnerships with third parties where you and your friend are going to start a business, and often those businesses have issues after a while because one person doesn't want to work as much, or one person has a vision of going this way, the other person has a vision of going that way, or you just get to bickering too much. It happens. And there you need an agreement between the parties, an operating agreement, sometimes a partnership agreement that defines how much someone's going to work and what's going to happen if one person passes away or one person doesn't want to work in the business anymore. Those things are absolutely needed, and that's when you need to bring in a professional like an attorney to draft up a proper partnership agreement and operating agreement. But if it's just you starting your business, or if you're starting it with your spouse, then you really don't need anything fancy. Any standard boilerplate operating agreement is fine, because frankly, if you're married to your partner and you decide to get divorced and you're going to take the business apart, the divorce court's going to control the division of that business anyway, so it won't matter what the operating agreement or the partnership agreement say. So you don't need it. But if it's just you, yes, you do need it. You can go through any number of services. In Corp Services has a service. LegalZoom has a service that can form it. An attorney can do it. An accountant could do it. Not expensive. It's just you as a solo person. That just involves filing the LLC and then operating as an LLC, which just means your bank account is with your LLC's name. Your banking is all done in there. The business bills are paid out of the LLC checking account. And when you want money from the business to pay for your own bills, you just transfer money from the LLC's account to your account. It's called an owner draw, and then you spend the money any way you want. Very simple to operate. LLCs are generally better for a new entrepreneur than an S Corp or a C Corp. Reason being that they're less management intensive. You don't have to have an annual meeting. It automatically is what's called pass-through taxation, which is great, which means it doesn't pay its own taxes. It can be really great. Some of the questions people often have are, well, where should I form an LLC? Should I do it in Nevada? I heard that's good, or I heard Delaware is good. A lot of people talk about that. So the answer is, if your business is operating in a state where you're going to stay, even if you're in a high-tax state like California or Illinois or Connecticut or New Jersey, you may as well form your entity there, because you're not going to save anything on taxes if you're operating from that state, meaning your office is there, or if you're working for home office, your home is there. You're going to pay taxes that state anyway. You're not going to get any gain from having a Delaware corporation or a Nevada LLC, or for that matter, a Wyoming LLC, which is probably the best jurisdiction for an out-of-state jurisdiction. You're not going to gain anything unless you're moving. Now, if you said, well, I'm living in California now, but I have a bunch of friends that have moved to Texas because it's lower taxes and lower regulation, I wouldn't really move there in the future, then form a Wyoming LLC, and when you move, you'll cut all your ties with California very cleanly. And you won't have anything where they have any ways to sort of pull you back into the state and find a creative way to tax you, because California is very creative about figuring out ways to tax people. Matter of fact, if you look up a legal case, which is interesting, they taxed the Hughes Corporation, which owned a satellite in space, which is geospatially proportioned over California, and they said, oh, it's in California, we can tax it. And they succeeded. That case went to the Supreme Court. So you don't want to be litigating with the state of California, who's looking to collect your tax money. So if you're moving from a high tax state to somewhere else, then a Wyoming LLC is your best answer. And when I talk about asset protection, what am I talking about? Well, the LLC is like a firewall where your business is on one side of the wall and your personal life is on the other side of the wall. What that means is that if someone sues you because something had happened in your business, all that they can get are whatever assets the business has. So if the business had inventory, or the business had cash, or the business had accounts receivable, a creditor could try to attach those things. That's all very difficult to do. And creditors generally don't like trying to chase around those kinds of things. If you're a very small business with very small amounts of receivable, very small amounts of inventory, a lot of attorneys won't even take a case like that on a contingent fee. They want to be paid up front by whoever wants to sue you, which is great news for you because that protects you from a lot of lawsuits. What the LLC does in the firewall, and if you remember, a firewall is where if a fire starts on one side, it can't get across to the house next door. The firewall protects your personal assets, your personal car, your personal house, your personal bank account. It protects you from a problem or a fire on this side leaping over the firewall and getting to your personal assets. Now, to benefit from that, it's important that your LLC is set up correctly and that maintained correctly. Set up correctly is fairly easy. It's good to have an attorney do it. It shouldn't be a very expensive thing. It's still going to cost you $1,500 to $2,000, but not terribly expensive in the scheme of things. And remember how I told you it may save you even the cost of defending yourself. If your LLC is set up properly, if someone sues the LLC, if you really don't have any assets in there, you really don't need to do a lot to defend yourself. You'll still want to have an attorney, but they can just do very little. Because as long as the problem stays within the LLC, if there are really no assets to take, anybody who gets a judgment against the LLC is going to get a pile of air. And LLCs also have something called a charging order, which makes it, if you set it up properly so that someone that gets a judgment against an LLC and tries to seize the shares of the LLC can actually end up with a tax bill. It's more advanced than I want to talk about today. You can learn plenty about that on the internet. Just look up charging orders. And the bottom line is an LLC can be a liability for someone suing it, because if they sue and they try to take the LLC, they end up with a tax bill, which is not anything anybody wants to do. But anyway, the important point for this video is an LLC provides a firewall between your business life and your personal life. The other thing with the LLC that I believe, if you're working with a spouse in your business, then be thoughtful before you include them as an owner of the LLC. You want to talk to an attorney about this, but you wouldn't want to include a spouse who's not active in the business as an owner of the LLC. You want that non-active spouse to have no connection at all with that LLC, not as an owner, not as an employee, not as anything, because in most states, if you get a judgment against only one spouse, it's really hard to do anything with it, because when you try to get into, say, the personal house, if it's owned as husband and wife, in a lot of states, you can't sell the house or do anything else. So it really helps you as an entrepreneur. So again, that's a more advanced strategy, but I wanted to alert you to it. Don't just be like a nice guy or a nice woman and include your spouse or your child as an owner in the business just to be nice about it. If they're not working in the business, don't include them as an owner. And the reason I say that is you could potentially expose them to liability. You don't want to do that. The other thing I'll say is that generally speaking, an LLC is better than an S Corp for most entrepreneurs because it's simpler to maintain. They're both very good. They both have similar tax treatment, which means it doesn't really cost you extra in taxes. But an S corporation or a C corporation both need an annual meeting. And people always forget to do that, and it creates problems in your business and creates problems in your asset protection, most importantly. So an LLC doesn't require an annual meeting, so it's simpler. They're both similar in cost to set up, similar cost to register with the state, similar in legal cost, so that's going to be better for you. Biggest secret with these entities is do not pay your personal bills out of your company bank account, meaning your LLC or your corporation. Don't go writing checks for, your car payment or your house payment or your electric bill or buying groceries with a debit card from the business. Because once you start treating the business as though it were just you, where you can just spend money on personal things, you create a liability hole that you can drive a Mack truck through. And you don't want to do that. What you want to do is, if you want money, you do what's called an owner draw, which simply means taking money out of the business and putting it into your personal bank account and notating in the books of the business owner draw, and then spend the money however you want. You can do whatever you want with it. But do not write checks or use PayPal or use cash from the business to pay for your personal bills. It's the biggest way to completely void your asset protection. So I don't want you doing that. The other thing with LLCs is there are ways to save money on taxes with LLCs. And just to give you two really quick examples, we could go long and deep in this, but just two quick examples. Number one is donations. I don't know if you know this, but when you're doing charitable donations, first of all, you get no tax deduction unless you itemize on your taxes. So if you're just taking your general personal tax deduction without itemizing, you don't get to deduct charitable donations. With an LLC, you can deduct charitable donations. And secondly, with an LLC, you get deduct from the first dollar that you contribute. If you're itemizing deductions, you can't deduct a charitable donation until it exceeds 2% of your adjusted gross income. So you essentially don't get a tax deduction on the first 2% of your income that you donate. But if you did that same donation by your LLC, then it's tax deductible from the first dollar, and it's tax deductible even if you don't itemize, which is great. Second thing I'll tell you, which is real quick, if you have healthcare insurance that you're paying for, then if you pay through your business, you can deduct that healthcare insurance fully. If you are doing it personally and just paying for it personally, you don't get to deduct it. So it's a way to deduct a significant expense, which just saves you money. It probably saves you a third of the cost. So those are two examples. There are many, many ways you can save money with an LLC through your taxes. Talk to your accountant about that. It can be really great. It can be a great way to build up huge retirement funds very quickly. You can do things called self-employed retirement plans where you can put away tons of money, meaning hundreds of thousands of dollars a year that you otherwise can't do. So you want to talk to an accountant about that. They can be really wonderful ways to go, but that's deeper than I want to go today. So hopefully this helped you learn about why you do absolutely need an LLC for your side business. Provides liability protection, can provide some tax deductions, and can provide an opportunity with some planning to put hundreds of thousands of dollars aside that you otherwise couldn't put aside without the business. So it's Attorney Bob Diamond. Hope this is helpful. If you like this, give it a thumbs up, subscribe, put your comments down below if there's more that you want me to go more in depth with. I'll look over the comments and hopefully be able to make a video answering your question if you put your question down below. So thanks for being here, and I'll see you next time.